Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is the 3rd of November 2023. We have NFP in less than 8 minutes. So we're going to be tape reading NFP and we're going to be seeing how price is going to be moving. So this is going to be just a case study to see how price is moving and dealing with liquidity. So this is the daily chart. You can see how we're just being stuck in consolidation between this high and this low. From this range high to this low. So we're inside this range, consolidating. You can see that we're trading inside the weekly fair value gap, which is from the weekly chart, right there. Dropping down to the hourly chart. We have this high. We have this low. You can see price is closer to the sell side liquidity when compared to the buy side liquidity. Going to the 15 minutes time frame. As you can see, this is sell side liquidity, and below the sell side liquidity, what do we have? We have the rejection block here. So we'll be annotating that. We have rejection block here. Let's make it in another color. So how far can price go below this low? We have the rejection block right there. Going back to the 15 minutes time frame. We have a buy side liquidity here, and we have fair value gap right there. So we have this buy side liquidity, and above this buy side liquidity, we have this fair value gap. We also have bearish order block here. These consecutive up close candles, they will be considered as bearish order block. Moving down to the 5 minutes. Let's head to ES. I'll be removing the executions, so it's not distracting anyone. As you can see, we traded. This is an hourly fair value gap. I'm gonna drop down, or I'm gonna show it to you. But you can see also we closed above this daily fair value gap. So we have a bearish order block right here. Let me remove all drawing. You can see we have here bearish order block. You can keep this fair value gap in your mind, or I can annotate it. less than 3 minutes. Let's make it quick. The fair value gap is right there. If you scroll back, this fair value gap right there, from this candle's high to this candle's low. So you can see how we closed above it here. We first traded above it, reached the consequent encroachment. We have seen some resistance there. We traded lower. You can see how the bodies are respecting the low of the fair value gap. We traded up higher, closed above the fair value gap high of the hourly fair value gap high, and we're treating the high of it. You can basically see there's just a bit of coloring outside the lines at it. So less than 2 minutes, we have this buy side liquidity. So basically, price is just being in range since yesterday's close. We have buy side liquidity here. And we have sell side liquidity here. Less than a minute, and many of the people who pushed the button are gonna be regretting that they did. If price, how far can price go below this? You could be looking at this small inefficiency and this right there. Let's mark this. Alright, let's head back to DXY. Let's see. So as you can see, we have buy side liquidity up there. We have sell side liquidity down there. 10 seconds. How far can price go below this sell side liquidity? We have the rejection block here. 5 minutes. 5 seconds, I mean. No, this is the rejection block. My bad. We also have a consequent encroachment. You can see how price is just tanking lower. This is a weak consequent encroachment of the daily time frame. Price touched it, and we've seen some reaction there. Price has left this buy side liquidity in this 15 minutes time frame fair value gap. Let's check on ES. Price has taken the buy side liquidity and it's close formation to the bearish order block. It has left those equal lows in place. As you can see, we have like double bottom here. So many retail are gonna be trading this right there. Like they will be entering at that point. Because we have low, high, low, low. Not a lower low, but we have equal double bottom. And then price traded broke up higher. They will be waiting for the retouch. It would retrace to the candle's high, and they will be entering right there. Their stop loss would be down there, and they will be aiming somewhere close to right there. Price has reached the bearish order block. We can see some reaction here of the bearish order block. Can you see that in one candle, check the low and the high right there. That's about 19 handles in 1 minute, and you still want to trade it. If you were short and you have your stop loss above this high, your stop loss will not be respected at all. So price has traded below the weak encroachment, traded below the rejection block. Now it's slowly approaching the sell side liquidity. No positions is being taken at all during the NFP or ahead of NFP. We're just tape reading it, we're studying it, we're just looking of what it is showing us. How is it moving from the sell side liquidity to buy side liquidity, and from buy side liquidity to sell side liquidity? How is it moving generally? You can see how price has traded to the fair value gap before it traded lower. It has reached its bearish order block. Now we can see that NQ hasn't reached to the rejection block when compared to the bearish order block when compared to ES. As you can see, this is the bearish order block on NQ. Price didn't reach to it. You can see that how we left those relative equal lows, and this is side liquidity basically still in place, and we reached to the bearish order block. Now we will wait till the opening at 9:30 a.m. New York time, and we might see a trade lower in a low resistance liquidity run, reaching to those relative equal lows right there. This is side liquidity. So I'm aiming for those liquidity to be attacked later on. Let's take a look on euro and pound. As you can see, it has traded back up to this fair value gap. It has opened, traded lower to the high of this weekly fair value gap. Let's go to the weekly. What is the high of this fair value gap or the low of this candle? Look right there. It is the 1.06150. Let's go down to the daily. What is the low of this candle? 1.06148. So it went below the fair value gap. So it went inside this fair value gap 0.2 pips right there. This was yesterday. We opened on Friday and we just touched it and we kept trading higher. Price has swept the buy side liquidity here. So there is a seasonal tendency that we form the high at the second week of July, and then we form the low between September and November. So between September and November till the end of November, there is a probability for us to form a low. And maybe during December or late November and December, we can get a Santa Claus rally that may rally up higher a bit. But you can see that we formed the high, or it is when smart money are taking their profits. Many times it's gonna be the second week of July. And you can see what is the high here. This was the high, and it is the 14th of July 2023. It is exactly the second week of July. And it was Friday. We formed the high of the year. And then we just started trading lower. Let's take a look on Euro. The same thing has happened in Euro, but this was a bit delayed. We formed the high on the 18th of July 2023, and then we traded lower. But you can see how we formed a fake bottom here. And in my weekly reviews, you can go back to this time period right there. You will see me talking about this as a fake bottom, and we're gonna be seeing price trade below these relative equal lows right there. And we did see that in fact happen in price. As from the weekly chart, these lows, I was targeting them. You can refer to my weekly reviews on my YouTube channel. You can see how I've mentioned that the run below this low right there, this creates a bearish breaker. This is a bearish breaker, and we're likely to see even lower prices. Now, what is my expectations about price? I'm still expecting we might run out this low, this fair value gap, and this eventually this low. So I'm expecting lower prices generally in euro and in pound. You can see how the XY is trading lower. Let's check on gold. You can see how it reacted to the geopolitical things that happened 3 weeks ago or 2 weeks ago. And today it rallied. Bullish on the block right there, run up higher. Next is this high. So I'm expecting this price at liquidity to be tapped in. And by the way, not yesterday, excuse me, last last stream when we were streaming the FOMC interest rates announcement, I was aiming at this low to be attacked, and we in fact seen that. No, that low right there. So if you go to the past live stream, it was on the 1st of November 2023. I was streaming the FOMC interest rates announcement at 2 p.m. New York time. Right there when price closed below this favorite gap, I mentioned that I want to see price trade and take out this inside liquidity. It did also close below this favorite gap, traded back up here, traded the high of this favorite gap as resistance twice, as you can see, and then it gapped lower, gave up the ghost, created this gap right there. This is a complete liquidity void. This is not a volume imbalance. This is not a sell side liquidity. No, this is a volume liquidity void. There's no trading between this candle's high, which is where price closed, and this candle's opening. So between these two price points, there is no trading, and it is the liquidity void right there. So we took out the sell side liquidity right there. It's from the daily chart, you can see it better. You can see we formed a high, low, higher high right there, and then we traded lower, lower low. Now, once we close today and on Monday, Tuesday next week, excuse me, we might form the high of the week when we're trading back inside this February gap. So on Monday, I'm expecting some kind of range consolidation. Tuesday, price trade higher, take out Monday's high, which is gonna be the 6th of November. Take out its high, trade inside this February gap, bearish breaker, February gap, that is a bearish unicorn, and then trade lower, attack this low. Look at the constant encroachment of this wick. Look at the wick constant encroachment of this discount wick. The low, we have a low here inside this Fibonacci gap, so all of these can be objectives for me. So this is what I'm expecting for DXY. For ES, I'm still monitoring closely if we go to the mean threshold of this bearish order block. The bearish order block mean threshold comes at 4,384 and a half. So 4,384 and a half is going to be an important level for me that I'm going to be tracking. If we trade above it and we close on Monday or today, or we treat it as resistance, this may tell me that we're going to be reaching lower to trade inside this family gap that can be potentially forming. Otherwise, if we trade above it and we start treating it as support, this is telling me that we will be running for these relative equal highs, and this fair value gap right there. Let me mark this level also. Now, if we trade right like this until the opening at 9:30, and at 9:30 we trade lower, take out this low, I might look at this as a bearish breaker, because if you go to the lower time frame 1 minute, you'll see that this is actually a breaker. We have a high, low, higher high. If we trade below this low, we have a bearish breaker. These four consecutive down close candles are gonna be considered by me as a bearish breaker. And if we form a fair value gap, we have also an inversion fair value gap here, so we can have a balanced price range in some kind. And this inversion fair value gap with a fair value gap that can potentially form here, we can use that as means to go short, and we can aim for this fair value gap. And if it was really extended to the downside or limited to the downside, I'm still aiming for these lows that I've mentioned earlier. We have the double bottom and this low. So this is basically the overnight trading, even London trading. So we have here London's low, London session low. This is sell side liquidity. We took the high of London, so it would be logical for me to be expecting price to run out the lows, and we have actually traded to the bearish order block. So it is a place where we can see some kind of reaction from price. Let's check on Dow. We're using it as barometer only. We're not trading it. You can also here see little people lows took out the high. So also even on this, if we trade below this low, or if we close below the concept encroachment of this, let's mark it right there. This is the weak concept encroachment of this discount rate. If you go down to 1 minute, you see if we close below this, which means that we're closing below these two fair value gap, this fair value gap and this fair value gap. I'm gonna be treating this fair value gap as an inversion, and we'll be